Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 12th of September 2020 and we're publishing our gold and silver weekly update for the weekend in the 11th of September. Now before we cover gold and silver prices, we alert you to some important videos we published in the past few days, and we've placed links to them in the description box below. Yesterday we published UK post-positive data. Sterling still suffers, gold and silver rises, where we highlighted that gold and silver prices rose quite significantly in sterling terms, even though they failed to do so in dollar terms. And the day before, gold and silver rise and fall as ECB leaves rates unchanged. And the reason we refer to these two videos, because they put into context really a background for today's weekly update. So, gold rose $7 last week from $1,934 to $1,941, having hit a high of $1,966 and a low of $1,907, so a rise of just 0.4%. In sterling terms, gold finished the week at £1,516. That's up a whole £60. Or 4.2%, showing the extent to which sterling weakened during the course of the week. And in euros, it closed at 1,638 euros. That's up €5. Silver fell 17 cents, from $26.94 to $26.77, having hit a high of $27.50 and a low of $25.91. So a fall of just 0.7%. In sterling terms, silver closed at £20.91. That's up 64 pence, or 3.2%. And in euros, it closed at 22.60 euros. That's down 0.16 euros. The gold to silver ratio rose slightly from 71.8 to 1 to 72.5 to 1. Bitcoin is down again this week, some $125 or just over 1.2%. Now the Dow Jones closed on Friday at 27,665, up 131 points on the day, but down 468 points on the week. The S&P 500 closed at 3,340 points. That's up 2 on the day and down 86 points on the week. And the Nasdaq closed at 10,853, down some 66 points on the day and also down some 460 points on the week. Now we're not surprised to see particularly the Nasdaq fall back. For those regular listeners of ours, you will perhaps remember that we highlighted that we did expect the Nasdaq to fall back, although it did go up the following day after we published the video, but has since come well back. And will, when the markets really do start to decline, perhaps lead the way down. Brent crude closed at $39.83, down $2.83 on the week, and WTI crude closed at $37.33, that's down $2.44 on the week. The dollar index stands at 93.33, and that's actually up 0.62 points on the week. It did oscillate quite significantly the past 2 or 3 weeks. Our conclusion from last week's video stressed that we expected gold to move within a price band of 1,800 to 2,000, but mainly oscillating within a consolidation phase at or around 1,900, which is basically what it did, perhaps to the slightly upper end of the 1,900s. And silver prices ranging between $26 to $28, which apart from a few cents is exactly what it did. Monday was a holiday, and there was some downward action prior to the ECB announcement on Thursday, as some analysts believed that the European Central Bank would announce much higher stimulus measures than it actually did. And there was even thrown into the mix the potential for a further rate cut, though we ourselves did not expect that at all. And rates remained unchanged. Now, we saw some positive trade news, however, but the weekly jobs report was disappointing, as it remained at similar levels to the previous week, with the total jobless claims just shy of 30 million at 29.61 million. That's still a pretty devastating figure. CPI for August was 4%, down from the 6% figure in July, but still much higher than the market appreciated. And the producer price index for August was 0.3%, compared with 0.6% in July. From a technical analysis point of view, resistance for gold is seen near $1,960, with short-term support near the 10-day moving average of $1,944, with the next major support level resting at $1,919, which represents the 50-day moving average, which was admittedly broken momentarily this past week. But you can see gold really moving within quite a tight range. Medium-term momentum is still negative, while short-term momentum has turned positive, and together with a sideways moving RSI, suggests continuing consolidation with the prospect of a slight uptick in prices. The CPI figure of 0.4% following a heavy 0.6% the previous month could have disturbed markets a little, and we suggest that it did, as it is implying a continuing rise in inflation. But this was eventually shrugged off, or at least for the time being. Now, silver markets were quite choppy this past week, but like gold, the sensation rather than absolute results is a very slight upward bias. So although prices fell, one couldn't help but feel they were desperately trying to rise. A key support level is the 20-day EMA at $26.75, with $25.85 lying beneath it. If silver can manage to stay above the $26.75 figure, then it will likely test the next major resistance level at $27.75. Interestingly, the next major resistance level beyond that is $28.50, which is higher than our $26 to $28 range that we envisaged for last week and really the week before, and perhaps suggest is likely still to be the range this coming week, save for the FOMC announcement on Wednesday, which we shall cover in a few moments. So we have some interesting data announcements coming this week. On Monday, though, there's nothing scheduled. Tuesday, we have the import price index for August and the industrial production index for August, so they're worth watching out for. Wednesday, retail sales, the NAHB home buyers index for September, and then the Federal Reserve interest rate announcement and press conference. That's a key day. Thursday, weekly jobless claims report, and we suspect the Fed may be aware of what those figures are likely to be, which is another reason why Wednesday will be important. And we have housing starts for August and building permits for August. And then on Friday, we have the current account deficit for quarter two and the consumer sentiment index for September. So the important days are really Tuesday through Thursday, with, of course, most attention paid to what the Fed Chair Jerome Powell has to say and any decisions made either on interest rates or stimulus measures. Now, we can expect to see some volatility in the run-up to that announcement, coupled with, of course, the reaction once that announcement and press conference has taken place. With a slight uptick in inflation and the ECB doing very little this past week apart from just continuing its normal practice, we're not really expecting any significant FOMC move on Wednesday. But that said, with Congress and the state unable to agree on a further stimulus package, it will be interesting to see if the FOMC feels it needs to add further stimulus to the economy because of the negative effects that not having this additional consumer spending could have on the marginally positive trading results seen so far these past few weeks. The coronavirus pandemic still dominates the news, and with nearly 198,000 deaths in the US, which will probably be reached today, and over 28.8 million cases worldwide, and a vaccine still at least some months off, and according to Dr. Fauci, I think yesterday, even once that's been created, it's going to take 6 to 12 months before entire populations will be inoculated. So with all that in mind, there is justifiable concern about further lockdowns and business closures, as we are once again beginning to experience again in the United Kingdom. Not to mention worsening situations in Europe, which we covered in the middle of the week. All of this serves to underpin, frankly, precious metal prices, especially if equity markets are hit further. There have been some moderately dramatic falls, but then rebounds have tended to occur, though the short-term trend is, in our opinion, marginally down. Now there is, of course, and we can't rule this out, the possibility that the FOMC will try and stimulate equity markets further, especially as Jerome Powell made it clear that the 2% inflation target could be exceeded for a while without causing too much concern. Politically, he will certainly be under a lot of pressure to do something with the presidential election now less than 2 months away. And so this particular meeting announcement will perhaps be the most important one, which could in some way persuade the electorate to feel that either the economy is in safe hands or otherwise, and that the Fed may therefore suggest that it will do whatever it takes and maybe even instigate some measures, though we don't necessarily think they should. It may be politically adroit that they do so. That said, we don't see a major giveaway, but we're fully willing to admit on this one issue, because of the political dimension, we could actually be wrong here. What do you think? What do you think the Fed will do on Wednesday? Will there be a further reduction in interest rates? Will we see even greater stimulus measures introduced? Do share your thoughts. And meanwhile, thank you so much for listening. And if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Further, we have been asked why no new video has appeared on the Richard and Greg channel, and the reason being is that Greg, or his computer, is actually in computer hospital, as there has been a problem with it. But we hope to resume that service very soon indeed. Meanwhile, we trust and hope you have, of course, an enjoyable and safe weekend and a most prosperous week ahead. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.